All right, folks, welcome to the missed trade recap. It was not a missed trade, it was a break even trade for me over here. But since the market will take profit and we're not in a trade, it was a missed trade recap for me now. And we had a setup today on Monday as well. This is as well as a market recap for Monday, as well as a missed trade recap for the Friday trade. So I said I will make a video on it. And the Monday trade, we didn't execute no trade simply because we didn't have the right time to purge, as well as the 11 o'clock came around and we never had a setup before that. So we excluded the setup. And a quick little touch on today's, I would have not taken a trade at all, even if I were to get set up before 11 a.m. because looking back at it right now, I need to have a New York move. I can't accept the London session. I'm not a London session trader. If the London session gives a setup, New York should respect it if it's gonna truly work out. Right? If the London session doesn't give us if the London session does give a setup, how do we know if New York would respect it? We don't know. So we need New York. We need there to be a New York move there. So since we trade New York only, not a London session, we need to have a purge between 6 a.m. and 10:30 a.m. And if we do not have a purge between 6 a.m. and 10:30 a.m., we will not execute the trade. Simple as that. That's the overall lesson of Monday of today. Today's market recap. The lesson is that we must have a New York move, not the London session. I'm not a London session trader. I primarily trade New York. If I trade New York, I need there to be a New York move and not a London session move. I must have a purge between 6 a.m. and 10:30 a.m., not anywhere before that or anywhere after that. I need to have a purge between that specific time. And that's the overall lesson of today. The lesson we had a short, and I've already told you guys, the context of a short. We had in this case, a short-term drawn liquidity on today was leading to the long-term drawn liquidity. So it made a lot of sense to go for the long-term take profit. As you guys know, we reintroduced the low time frame mix, high time frame reward, but it will be very rare cases where we have the short-term drawn liquidity aligning with the long-term drawn liquidity. But most of the time, it will be a fixed RR. But very rare cases when the market does offer us that long-term high time frame reward trade, we will target the higher time frame targets, but most of the time it's going to be a fixed RR until we get that special occasions. But on a weekly time for weekly to the downside, another weekly to the downside, we had a weekly premium ERL to discount IRL, and we had we could say a weekly ERL to IRL, doesn't really matter, but we did have that over there in a higher time frame. Daily, we had a daily wick above lower prices, close below lower prices. We have daily IRL to ERL. Right down here, right now it's going to be right over here. We had daily steer to downside, as well as we had a daily, that's what we had for daily. We're selling above the weekly opening price, which is very nice. Going down to the 4-hour time frame. We do currently have a 4-hour bearish order flow, close below lower prices. And I thought we had a false market shift. This is not a false market shift. It's just a rejection above the high. So if we're in a bearish order flow, we want a rejection above the high, break below low. So it just plays that role. It's not really a false market structure shift. We had a 4-hour key lowest, 4-hour fair value gap, as well as 4-hour CRT, which is a double purge, range low, range high. All the reports are range low first. We still are range because the range got respected, as well as double purge. We stood at a low, stood at a high, stable low, stable high, premium discount. We're in premium to sell off as we're in the top discount dealing range. We tap premium dealing range, dealing range low, and the lower time frame looking for a purge between 6 a.m. and 10:30 a.m. We had a purge at 5 a.m. We cannot accept that. We must have a purge between 6 a.m. and 10:30 a.m. So since we didn't have the right time to purge, we do not look for a trade unless the market goes up higher first it out at the right time, then gives the right model one, then we can potentially execute. Otherwise, we can execute. In any case, in this case, you can see the market with our direction very well. This does look to be an OTE here, but looking back at it right now, I would have not executed a trade at all. And I didn't even execute the trade because the timing ran out. If we only trade New York, if we trade New York, there must be a New York move. We cannot be a London session. I don't trade London session, so I don't know what happens on the session. I primarily know what happens in the New York. I don't trade London session, so I must have a New York session move. And that's the lesson of the market recap. On the Friday miss trade recap, the lesson is I already gave you guys all the context already on for Friday, but the lesson overall on this is we cannot break even. Break even is a scam. My entry is an OTE, meaning my entry can get retapped into multiple times. Market can consolidate my entry as long as it wants. It should be retracing my trade more than often than not because it's OTE, meaning it's gonna go to it more often than not. As well as my stop loss is total soup, so I have a safe stop loss, which is a total soup. My take profit is a fixed RR or a total soup again, and as well as I let the whole person play out. I do not break even too early. The only time I break even is at 4:30 p.m. New York time at Friday, or if I'm targeting the higher time frame reward and I have an entry at the 4-hour CRT hourly CRT low, that will be my break even on the range that I'm actively trading. Only at a CRT low, nowhere else. Otherwise, it's a fixed RR and no break even. And the only other way I can break even is a Friday 4:30 p.m. only. In this case, I broke even before 4:30 p.m. and the market stopped me out and eventually delivered very well and nice, hitting our drawn liquidity for a 3RR. Beautiful trade. And the lesson is, this is a missed trade recap. This is why it matters so much. Like the little details, even if you break even, it matters a lot. Because now that I broke even too early and I got stopped at a break even, now I just missed out on 3RR. If I were to break even at 4:30 p.m. and the new week comes around, if the new week comes around, let's just say it goes on a loss, guess what? Will it be a loss? No, it'll be a break even. If it goes on a win, now I'm making 3RR. But if I break even too early, 4:30 p.m. in New York and Friday, if I break even before that specific time, market stops me out. New week comes around, market's gonna take profit for a 3RR without going back down to my entry. Now I miss out on a 3RR or 4RR or 5RR depending, on it. In this case, I missed it out because I broke even too early. So the lesson is, I do not break even too early. I'll let the whole person play out. My entry is the OT, meaning market should come to my entry more often than not. And the next lesson is, I let the whole person play out. I do not break even. I let the whole prediction play out. And one other lesson, which is very important lesson, is the OTE. I must always mark out the OTE because OTE usually helps me be more calm and less stressed. Because in a technical way, if you draw something technical in a technical way, it's less to give you emotion. It's literally meant to give you less emotion, right? If you're trading without the technical edge, you're just trading emotions. But if you have a technical edge there, if you draw the OTE, you're less emotional because you see that, okay, this could be potential OTE, meaning deep retracement. And another lesson is, I must always, and I will always, and I do always mark out the OTE just to reduce the emotion. And what is OTE? Why do I say my entry is OTE? OTE is basically a deep retracement, and the multiple one usually has a deep retracement all the time. Usually want that to happen because OTE starts on the next leg of the move, and OTE is very viable and very good because, as you guys know, the market makers wants less participants into the correct move that's going to happen. So this is the correct move that happened. The market maker wants less participants from participating in this specific move that's going to happen. So they need to go fuck up these people's position by coming back, consolidating, making people be patient, making people who are patient impatient, and fucking up their position and get out too early, like how he did it to me. So that's why OT is very important. That's why you need to now break even. You need to let the whole person play out. And your entry is always OTE. Your stop loss should always be total soup. And your take profit should always be total soup or a fixed RR. In this case, unfortunately, they caught me into the trouble where I was impatient and the market did a deep retracement down to my entry, consolidated my entry, and eventually moved out. When it consolidated, it took me out of the trade. Because as you guys know, the market makers wants very few to participate in the move, and he wants to take a lot who are in the right side of the market by making them be impatient, by consolidating, making them second guess. So the lesson overall is to mark out OTE, to let the whole person play out. Do not break even. Only break even at New York, 4:30 p.m. at Friday only, or if I'm targeting the higher time frame reward and the market, and the only time I'm breaking even on that is when they hit a CTHD low of the actively range I'm trading. And the next lesson is to not make bullshit theory. I want the market to come back to my entry more than once to accumulate, to take out those impatient participants. And the next and last lesson is to always mark the OTE and to know that market more often than not will come back to my entry more often than not because it's OTE, right? It's supposed to come back to my entry multiple times. And to mark OTE always, because OTE is very viable, where it reduces emotions because the technical edge is there, present, without you second guessing. And that's it. That's the lesson. And this is a missed trade recap. It's a missed 3RR trade. It's a very viable lesson. So from now on forward, I will only break even at Friday if the trade is running at 4:30 p.m. only at Fridays, and the other ways I could only break even is if I'm targeting the higher time frame reward, and my break even spot would be the CRT higher CRT low of the actively range of the lower time frame range I am trading. And the other lesson is I will always mark out the OTE. I will not break even. I let the whole machine play out. My entry is the OTE. My stop is total soup. My take profit is total soup again. And I do not break even. And I have conviction and confidence in all my trades. And I want the market to come back to my entry, because when the market comes back to your entry, more often than not, is OT. I said it before multiple times. It's just a reminder, right? You know what I'm saying? Just to remind your fucking brain, because my brain needs to hear more often than not to catch it as in a way to, okay, I cannot fuck this up. So next time, I will not break even. I will let the whole person play out. I will mark out OTEs. And the only time I will break even is if I have a setup at Fridays at 4:30 p.m. New York local time is the only time I will break even. And when a new week comes around, and if the market goes back to my entry, is a break even. Because to my take profit is a positive 3RR. But if I get out trade before 4:30 p.m. and the market is the market is around is above my position or below my position, and I get out too early, and a new week comes around, guess what happens? If it goes to my take profit, now I miss 3RR. If it goes to my entry, I miss nothing. Because when before the new week comes around, we break even. So you go back to my entry, it's a break even trade. So the lesson is to not break even. Let the whole person play out. I have confidence and conviction on all my setups. The setup that I follow my trading guideline rules, and I only follow my trading guideline rules. I only take the trades that follow my trading guideline rules. And this is the lesson of today. Thank you for watching. Make sure you guys like, comment, share, join the description below, and I'll see you guys later. Peace out.